The swine flu couldn't have come at a worse time. Just as there are some signs of a nascent recovery, confidence takes yet a hit again. Trade in the world, without a doubt, will be impacted. But let's take a look at whether different regions may fare slightly differently. In particular, let's look at the lessons learned from the 2003 bird flu, SARS, the SARS virus, the avian flu. As a result of that, in many parts of the world, the processes to deal with a potential pandemic have been vastly improved. And even if those may not be able to prevent the spread of a virus, it helps the confidence that the people may have in those regions. And confidence is ultimately what drives investment, what drives trade. And so in Asia, for example, that was pretty helpless when the SARS crisis first hit in 2003, they now have heat sensors, for example, at airports where anybody with an elevated body temperature may get flagged to authorities. Now, Mexico, however, doesn't have many of these more sophisticated processes in place. Things will take longer there to settle. As a result, Mexico, that's already reeling from the credit crisis, may be further hit. Indeed, if one just follows the natural flow of any flu, it is quite likely that in the northern hemisphere the flu season is coming to an end, whereas in the southern hemisphere the flu season is only getting started. But let's focus on what's happening in the US. We have the Federal Reserve that has to decide what happens to interest rates. We have policymakers that have to decide what other stimulus they may put into the economy. And odds are that even though this pandemic could become very serious, that we'll get through this. And this may just be a wake-up call for something else that in some years down the road may be something far, far worse. But for now, it is our impression that in particular the Federal Reserve might want to err on the side of caution, and this will be yet another motivation for the Federal Reserve to resist raising interest rates, to resist mopping up liquidity. Indeed, nobody is talking about raising interest rates right now. Everybody wants to print money to keep the economy going. And so we are very much concerned that we just not only have put the seeds of inflation in place, but we're really drumming up inflation here with printing money that at some point will make it through the economy. We just had numbers out that the gross domestic product has significantantly come down, but the price deflator, one of the key indicators of inflation, is going up. So these are the hallmarks of stagflation in the market. We also have business spending down drastically, whereas consumer spending is up a tad in the U.S. Now that was before the outbreak, or at least of people knowing about the swine virus. And what that basically means is that the consumers that are lured to spending are spending, but the smart money, the businesses, they realize that they only do emergency spending, only what they need to do. It's kind of like that Apple, without giving a recommendation on the stock, they can sell an iPod, but their server units, they may not be able to sell. And so, yes, that's good for some parts of the economy. But what it means from a longer-term point of view is that the Federal Reserve, in our view, will continue to try to print money, get things moving, and as a result, we are rather concerned that that may have long-term inflationary impact for the US dollar, may be bad for the dollar. Implications for particular currencies, please visit our website at merkfund.com, where we have discussed both a depression type of plays, if we were to have a significant deflationary spiral, or on the inflationary side, the reflation trades. We believe this may be a buying opportunity into some of these reflationary trading currencies. As the world is in shock, it may be an opportunity to diversify into those currencies. Have a look at our website, merkfund.com. Make sure you subscribe to our newsletter there, our videos here, and we look forward to talking to you soon. This is Axel Merk. I'm the portfolio manager of the Merk Hard and Asian Currency Funds.